Hi everybody, it's David Brear here, CEO at 11FS. Unfortunately, due to host illness and pretty packed schedules as well, we're not able to bring you the next interview in the Fintech Insider Focus series just yet. So you're going to have to wait for that next episode for that. But to still give you your fix and still keep you in the US, which is the region that we're focusing on this month, we wanted to recap this really interesting conversation from earlier on in the series. I spoke to Sheena, founder at Capway, along with Erin Pursell of Visa, to talk about what financial inclusion and exclusion, for that matter, looks like in the US and how to really serve underserved communities. It was a really fascinating discussion where Sheena showed us the importance of lived experience when creating products and services for those underserved communities, and her passion and dedication really shone through. If you haven't listened before, enjoy. If you have, give it another listen and see what you took away this time. Or if you really want to, search the rest of the back catalogue for some of our other conversations in the series from around the world. Enjoy. Welcome to Fintech Insider Focus in association with Visa. Our once insular world of financial services is now a global phenomenon, and there are people everywhere opening up new markets and discovering really new challenges like never before. In this strand of Fintech Insider, we take a burning question from financial services across the globe and try and put it under the microscope with explainers, expert panels, and in-depth interviews, all to bring the global community into focus. See what we did there? This month, the question we're getting our heads around is, what does effective financial inclusion look like in the US? Now, there's lots to unpack here, so maybe let me give you a little bit of context before we dive in. The conversation around the unbanked and underbanked is usually reserved for emerging markets such as Brazil or Egypt or India. But as the World Bank defines it, financial inclusion is about the system where individuals and businesses have access to useful and affordable financial products and services that meet their needs. And this is delivered in a responsible and sustainable way. Putting it loosely, there is no market anywhere that has actually accomplished that mission for anybody just yet. And with an estimated 7 million households in the US where no member of the family has a bank account, there is still a huge amount of work to do, even in the biggest economies. To talk about financial inclusion, you also have to reflect on why exclusion exists in the first place. Now, in the US of A, the barriers have often been down to low-income people or people of color, among other things. Now, historically, this has led to communities attempting to pull resources or build something for themselves. In fact, even back into 1888, Capital Savings Bank in Washington, D.C. became the first bank operated by African Americans, and more than 130 Black-owned banks opened over the next 50 years, providing capital to Black entrepreneurs, businesses, and prospective homeowners. But following the Great Depression, and without the same backing as the established players in the market, we've seen those numbers drastically decline into the modern era. An article in 2016 in Ebony magazine put this down to really the cost of doing business, the financial instability in their communities, and really counterproductive federal policies all have created overwhelming challenges for those businesses. In fact, according to the most recent figures from the Federal Deposit Insurance Corporation, a bit of a mouthful, less than 1% of all FDIC-insured banks in America are considered Black-owned today. So fundamentally, can we rectify this wrong? Can we get some of those 7 million US unbanked households plugged into the grid, into the normal financial services system? And now a new generation of players are trying and succeeding to change the status quo, from Greenwood's banking offered directly aimed at African Americans, to Cheese, a newly launched digital bank aimed at Asian Americans, to mortgage provider Maxwell's fully integrated Spanish language application service. But how do we make this change stick? Well, we'll get into that after a quick message from Visa. Visa's FinTech Fast Track program is streamlining the onboarding process for fintechs, enabling them to gain access to Visa's powerful capabilities and network. Visa and their enablement partners help fintechs launch and scale cards, virtual credentials, and disbursement programs. To learn more, visit partner.visa.com. Hey folks, we have super duper exciting news. The shortlist for this year's 11FS Awards is officially live. We asked you, the incredible Fintech Insider community, to help us choose the deserving winners of the 11FS Awards, and your response was outstanding. You voted in record numbers, and it's now time to see if your favourite fintech companies made the shortlist. With a total of 10 different awards up for grabs on the big night, including categories like Best Experience Design, Fintech for Good, Best Use of AI, and Consumer Game Changer, there is a lot to look forward to. Don't wait, explore that full shortlist now at 11fsawards.com. That is 11fsawards.com. And be sure to stay tuned to all of our channels to find out who will take home one of the coveted 11FS Award trophies on Wednesday, 15th of November. Welcome back to Fintech Insider Focus. We want to take this conversation a little bit wider, so we put together a panel of experts to really dig into the question, what does effective financial inclusion look like in the US? First off, we have my Fintech Insider Focus co-host for today, Erin Pursell, who is the Vice President, North America Fintech and New Business Development at Visa. Erin, I joked before we started, you've got like the most impressive job title I've ever heard of. So super cool job. Tell us a little bit more about what you do at Visa.
Yeah, sure. Well, first off, thanks for having me. I'm excited to be here. So I lead new business development here in the US, and I'm focused specifically on building new relationships with fintechs. I've been at Visa now for a little over 17 years, so I've seen a ton of change in the payment industry overall. And you and I were talking a little bit about this. I can honestly say these are some of the most exciting and dynamic times in payments. So it's always exciting, it's always challenging, it's fun, and frankly, like I'm never bored.
Very cool. I think we've got people lining up at Visa's job application website, like as we speak at that point. But I agree, it's the best time to work in fintech for sure. To sort of talk a little bit about this as well, we've got a great guest to join us. So we've got Sheena Allen, who is founder of Capway. Sheena, welcome to the show. Thank you very much for joining us over your lunchtime, I believe. So, what should anybody else know about Capway and yourself?
Well, first, thank you for having me. If I had to say, one thing to know about me, this is my second startup, but this startup is very special to me because it has allowed me to mix in my personal background along with my professional background. So my experience in tech for my first startup with my personal background, which is being from Mississippi, which has, unfortunately, the highest population of unbanked and underbanked. It's also known as the poorest state in the United States. And I've been able to kind of marry those two to build an impactful company. So if there was like one thing I would want people to know between the two backgrounds, it would be that.
Very cool. And how is Capway looking to address that? What do you guys bring to the market?
You know, when we first started this company, so the name itself stands for a new way of doing capital. That's what Capway actually means. The original idea for the company was I wanted to build a digital bank for unbanked and underbanked was the original premise of the company. But we started this in 2019. And then, of course, as we know, 2020, the pandemic hit. And we kind of looked up and we realized that everybody wanted to be a digital bank. And also that the world of digital transactions also was changing. You couldn't walk into a bank branch. So everybody technically had to go to digital transactions or some form of digital banking. And so the shift that we made was two things. One was we're not going to pull away from digital banking, but even if I bank you as someone who has been excluded from traditional banking, give you a debit card is only one part of the journey. And so the second part of that came to be, how do we actually build an ecosystem? And the ecosystem as a for-profit company, just to be honest, is you still have to make money while making impact. And so we figured out ways to build an ecosystem that we can make impact internal and external of Capway. And we can do that by making money by also not only building these consumer products, but by building a lot of IP and technology in-house that we could use throughout an ecosystem of anybody that was truly trying to target and change this audience.
Very, very cool. I mean, it's like you say, the talk of unbanked, underbanked. Actually, I mean, this isn't a tiny little niche, right? This is a huge population of people in that way. And actually, you know, we talk at 11FS often about the underserved, the overcharged, the overwhelmed. And actually, I mean, there's a lot of people in those categories in this economic times globally. So, but we'll kind of come to that a little bit more as we go into this conversation, because it's a great sort of starting point for kind of where we'll get to. Before we do dive in, I want to remind all the listeners, the views and opinions on the panel are their own and don't necessarily reflect those of the companies that they're representing. As always, nothing we say should be taken as tax advice, financial legal advice, or investment advice. Do your own research. It's probably very sensible to do that. Definitely don't take investment advice off of me. All right. With that said, let's get into the discussion. So maybe, Erin, let's start with you. And this is a biggie. I'm not gonna lie. Like, as far as opening question salvos go, I mean, how does Visa commit to empowering those who are underrepresented? Because that's a big question, right? Just to kick us off with, but give us a go.
Yeah, no, it is a big question. I have lots of different ways to potentially answer. And the first thing I'd say is, you know, we have a number of different initiatives across the company based on our attempt at uplifting everyone, everywhere. So, and especially those that are underrepresented. You know, our first objective is to always lead with our purpose all the time. And so this isn't just about responding to a moment in time like the murder of George Floyd, but it's really about looking to empower all people, always, all of the time. And we've been doing this for a very, very long time. I'll give you two tangible examples. One, I mentioned that I've been doing this for quite a long time. And, you know, my foray into payments, I started out in prepaid. And it was a brand new sort of product segment. And predominantly what we were seeing was that prepaid cards were providing an opportunity specifically for the unbanked and underserved to become a bigger part of the financial mainstream. In the US, when you had a large portion of the population that were not able to get banking relationships, they couldn't get debit cards and they couldn't get credit cards, prepaid cards and getting access to a financial instrument was bringing these underserved and often minority communities into the financial mainstream. So that's an example of one way that we, you know, Visa has been at this for a very, very long time with our solution. Second example that I give you, a really tangible example and one that's very personal to me, is I have the opportunity to lead a group of folks on my team, a subset of my new business team, to wake up every single day thinking about how we can best support minority communities through our relationship with fintechs. And so our relationship, for example, with Sheena and her company is an example of this.
Very, very cool. And I mean, Sheena, you touched on this a second ago in terms of, you know, near banked or unbanked. I mean, what does that actually look like in the US? We've got a kind of global listenership to this podcast. Actually, you know, that means different things in different geographies in terms of to Erin's point, in terms of, you know, access to financial services or crazy KYC processes that makes it prohibitive to people even to get into the system, or, you know, is that in education? That, like, what does that mean in the context of what you're looking to address?
Yeah, you know, at Capway, we've always had an international goal for what we're building, but of course, we wanted to start at home. So we want to start in the U.S. And interestingly enough, when I would pitch a lot of times, because mind you, you know, for context, at Capway now, our main goal is how do we create financial access opportunities for everyone, kind of to Erin's point. But when we say everyone, what that means is if you're unbanked, underbanked, underserved, 18, 60, make 40,000 or 80,000, how can you come to a financial service and feel like you're going to get that same opportunity? Whereas you might not feel that way when you walk into a bank branch or to someone else. And that's what we want to be able to give people, that feeling at Capway. But when I first started pitching, more so talking strictly on unbanked and underbanked, a lot of investors was like, this is not a U.S. problem. Like, nobody in the U.S. is like, everybody in the U.S. has a bank account. Like, this is not an issue. I I honestly remember an investor asking me if I made up the word unbanked. It will forever stick with me. And so a lot of people do think, and a lot of investors honestly say, hey, this is a problem you should be thinking about from an international perspective, not a domestic or a US perspective. And so I end up having to bring in my personal and having to show them personal experiences of, hey, I can drive you through the Delta of Mississippi for 30 minutes to an hour and you're never going to see a bank. Or you're going to go to my town in Terry, Mississippi, which is in central Mississippi, right outside of the capital, Jackson. I can take you down Ellis Avenue and you'll see one local bank and you're going to see 16 predatory options, payday lending, check cashing. And I would say the most interesting part of this is after the pandemic hit in March 2020, and after the very first stimulus checks went out in the United States, a lot of investors, even just from just to acknowledge it, would actually email me and said, hey, we're now seeing the government talk about a fourth of Americans can't get their stimulus check because they can't get it out direct deposit because they don't have bank accounts. And it's unfortunate, but the pandemic opened the eyes to a lot of people in America who for some reason thought everybody in America was middle class and had bank accounts. And so I preached it in 2019, but
yeah, you surprised me. Like investors with lots of money think everybody else has lots of money. Like shocked, But it's strange getting out of that. And I guess this is a big part of it more broadly. Is like financial services needs to get out of its own way a little bit to realize that not everybody who is a banker is a typical customer. And often we have these conversations with banks around the world where it's like, yeah, look, the experience of the CEO is not like the brutal realities of day-to-day lives of like normal people, right? And to your point, Sheena, when you look at the statistics, actually we see one from FDIC said, so it's 4.5% of US households are unbanked. And that sounds like you're like, look, if I got 95% on a test, I'd be feeling like I was doing pretty well. But when you say that's like 6 million people, like that's crazy, So, and the challenges, as you say, is just being on the periphery of financial services, just outside of that bubble, can cause just insane amounts of problems on a day-to-day basis, right? This stimulus check is a good example of that, but mortgages, all of these things, everything to be, included in, what would be air quotes on a podcast normal don't work very well. But, being in a normal sort of societal environment makes it really difficult, doesn't it?
Yeah, and people have to understand that unbanked is only 4 to 5% of households, but underbanked is even a bigger percentage. And a lot of times people are kind of on that thin line of unbanked to underbanked. Because you have to understand people are considered underbanked if they have a credit union or maybe they're using a prepaid, but they're still using alternative financial services to attempt to make, life go by day to day. And so it's a very thin line in certain aspects of unbanked to underbanked. If you look at those numbers together, it's even bigger. And then you have this next generation, Gen Z, which I have nieces and nephews who are Gen Z, and good gosh, they have no clue what it means to walk inside of a bank branch. And so they are not unbanked, they're underbanked, but in the sense of traditional banking, they are underserved because they're in a whole different category of ball game than what it was when, we walked into a bank branch at 18. That is not happening for the 18-year-old today. And so the world of unbanked, underserved, overlooked, this whole modern day banking or payments is so different from the traditional way that I think that's what people get lost at when you start talking about underserved. And I think that's something that Erin probably can say, even at Visa, this next generation is just as a part of like figuring out the puzzle as traditional unbanked and underbanked.
So I guess, look, this is not a new thing, right? Actually is this something that you think digital, though, and the way in which digital could engage with people, has the potential to change that? And I guess this isn't just a, funky KYC processes or like difficulty of access points. Everybody's got a smartphone, proliferation of digital data communications is better than ever before, and that's the same in Mississippi as it is in Manhattan in terms of like connectivity for those things. But I mean, is there something, I guess, deeper to this though? Because we've seen the Biden administration has signed an executive order making support for racial equality with underserved communities a top priority. But like, is that just sort of just words? Like, is actually anything changing at this stage?
Well, I mean, I just say you made the point about digital financial services being more prolific across the world. Really, I think that enabling individuals with a digital financial instrument is completely game changing, right? Like underserved, unbanked, people who purposely choose not to align themselves with the traditional bank, all those things, like the game has completely changed with digital enablement of financial services. And I think, we continue to look for creative ways to innovate with our network solutions and alongside of our partners who are really doing much of the heavy lifting and who have deep roots into minority communities and underserved communities. And they are the ones that are doing, a lot of the heavy lifting to bring these digital solutions into the market and in the hands of individuals. I think that we are now living in an age where we have much more of an opportunity to change the trajectory of people's lives with digital solutions and creative solutions that are solving some systemic issues, to getting access to credit, to just having a basic financial services tool in a digital wallet. So I mean, I think it's just very exciting times, and I think we're positioned very well as in financial services to solve some of these problems that maybe we weren't even 5-10 years ago.
Definitely. I think definitely from a speed of change and a ease of access, and there's an element of democratization there, I guess, in that sense, isn't there, in terms of access to services? But, I guess we're sort of talking about two separate things in terms of, inclusion in the system, but is the system inherently inclusive? Which sounds like that. I feel like I should work in marketing at this stage. That sounds like some sort of weird marketing slogan. But if the system is not inherently inclusive in that sense, and we can start talking about credit scoring or different things that are happening, or and actually for me that's almost do people really want to be included in a system that's not reflecting them to a certain degree? So, I mean, Sheena, you sort of talk about walking into a branch. I mean, actually, the challenges that can face is broad, isn't it?
Yeah. So, I mean, it definitely is very, very a deep rooted issue. I mean, if you're talking as far as minorities in this country, as far as the U.S. in itself, you're talking all the way back to slavery. Probably one of the best books I've ever read it's called The Color of Money. Without question, a book I would recommend to anyone to read. But it goes back to even being deeply rooted to, I mean, I think about my grandmother and my dad, who is 65, trying to convince my dad to download an app, even my own, was like pulling teeth. Because it's like they're so, Erin actually alluded to this. They don't want to be part of the system to some degree. They don't trust the system. So I'm going to keep my money in my house because I don't even trust you to take care of my money, because I've been discriminated against so much that I don't even trust you. And if I do use your bank branch, I want to be able to walk in, look at you in the face, have a conversation. Like, that's what my grandmother wants to do. Like, my dad wants to do that. So you tell them, no, download the app and then like do this. They're like, no. So you have that issue. You have the banking desert issue. Banking deserts. We talk about food deserts across the country. I mean, across the nation. India, throughout Africa, throughout America. We have these food desert issues that we talk about all the time, but we don't talk about banking deserts. Banking deserts are just as prominent as food deserts. So you have that issue where there is no bank branch to walk into.
Well, double click on that for me. Sorry, Sheena. So bank deserts or food deserts. What do you mean by that? Sorry.
So a food desert, for example, would be that there is no grocery store within probably 30 to 60 miles of where I live. So the way that I get my food is I'm going to go to the convenience store or the bodega if I'm like in New York, and I'm just going to I'm living off of the eggs that's sold in the bodega, or I'm living off the chips that I'm getting from the convenience store. Now, on the other side of that goes to money. So a banking desert is when you are living based off where you live. You can drive 30 miles, 60 miles, and you're never going to see a bank branch. Now, what has happened is even the banks that have left those communities, a lot of times smaller banks move in, your CDFIs, your MDIs. But then the issue to that, which is why I say it's deeply rooted, is that those banks don't have the technology to keep up with today's digital transactions. If you go to a Black-owned bank today and ask them what is their biggest issue, they're going to tell you technology. They don't have the money, they don't have the infrastructure to go with technology to keep up with fintechs today. So the problem is very, very deeply rooted. It's very layered.
Yeah. And there's no shortage of them across the entirety of the US, right? It's, was it something like 7,000 FIs, considered sort of community bank type organizations across the US. That's a huge number of them, which, as you say, together, rivals the top five, big banks in terms of like the scale of coverage that they would have. But the ability to invest in and compete, like Wells Fargo's, Bank of America's budgets are a little bit bigger, aren't they, in terms of being able to do these things. So, that's an interesting challenge, isn't it, in that way? I guess. Look, how much of this, if you stand up and go 6% of the population doesn't have a bank account, how much of this and how much of the responsibility to try and address this problem sort of sits with, either from a government perspective or with the regulator to create or better barriers of entry? I don't want to say lowering the barrier of entry because that's never really a good thing in a regulated industry. But Erin, you touched a little bit on things like prepaid cards, and we've seen that as a great gateway for building credit history and gaining access to systems in various different countries around the world. But is that the way in which you see that almost like the gateway into more traditional financial services?
So it could prepaid or other creative solutions be a gateway into the financial mainstream? I think absolutely. And I think the way that I sort of interpret maybe some of what you're asking is like, whose responsibility is it to really help change the game and drive inclusion, right? Is it really the responsibility of regulators? Is it the responsibility of business? Is it the responsibility of society? And I think the answer is yes, all of it, right? Like, it's super complicated. There's so many different ways to tackle it and different perspectives. And I think, there are some responsibilities, I believe, of the financial services industry to, as I said, wake up every day thinking about not just a traditional bank consumer, but also how do we remove roadblocks and build solutions and create an environment for our clients such that they can help drive inclusion for individuals, right? So I think I'd like to think it's partly Visa's responsibility to come up with creative ideas to do that. I think it's partners like Sheena to come up with creative use cases and build businesses, and my responsibility to help support her how I can. And I think government and regulation can help drive some of that as well. So I think it's a mixed bag, and it's sort of like, everyone's responsibility to do their part to help drive change.
Yeah. I guess coming back to something you said earlier on, Sheena, and again, I've for my sins had lots of conversations with, big global banks about these types of things as well. And the rubber really hits the road when actually people go, okay, well, I'd love to bank more people. We'd love to support, bottom of the pyramid. But it costs us like $200 to run an account each year. So if this doesn't make money, is it marketing? Is this a marketing thing? But you sort of touched on it earlier on, that actually you've got to find doing a good thing has to figure out a way of being a good business model as well, right? Because if you can make that happen, then this works at a large scale. And I guess a big part of that is being a bit more creative with the way in which you bring community together, the way in which you bring that marketplace around these opportunities, but equally not doing it with really ridiculously old technology that you've got to kind of, deal with. So how much, I guess, from the benefit of you starting from scratch from a technological perspective, but also through not just being bound by traditional financial services business models, have you really been able to get to this model?
Yeah, one thing about being a startup in this fintech space is at Capway, we can do things that Chase just can't do. If we're just being honest, not giving them a pass, but there's things that we can do at Capway that Erin's not gonna be able to do it at Visa because she has to go through 20 million different pieces of red tape to get, the language changed on something. Like I understand that it is a huge difference in being a startup in the fintech versus being someone who is such a dominant, huge player like a Chase or Wells Fargo or Visa or whatever the case. But I do think the issue that it comes down to, I'm realistic. I see both sides, but I think there's a middle ground. So I see the side of saying, as a company, as a financial company, as a for-profit financial service company, you have to make money. And that's the same reason for us, like I said earlier, we have an international, mission for Capway. We don't bank white, black, green. We bank green. We don't old, young. Like our focus is green because that's the reality of building a company. Now, as a Black woman, as a Black female, it's parts of my company where I'm always in my mind, how do I uplift my community? How do I uplift minorities? 100%. And I think because of that, and because of my background of being from Terry, Mississippi, and knowing that community so well, I'm able to bring a personal perspective and experience into a professional setting that I think a lot of the big banks also are missing. A lot of people who look like me are not at the table to even be able to give that perspective to say that's not going to work. But my argument on the other side of what we found creative to be able to do is the argument of saying, well, the lower to moderate income, there's no money there. So then I go pull stats. Well, Chase, how much money did you make from overdraft last year? How much money did you make from bounce checks? How much money did you make from ATMs? How much money did the predatory economy make last year? Yes, it's predatory, which is why they make so much money, but how much money did they make? So yes, I understand the net worth of an average Black family. I understand the net worth of an average brown family. And I'm a numbers person. So I 100% understand and how that plays into being a for-profit company. But as a fintech and being able to ask more for forgiveness than permission sometimes that they cannot do with the bigger guys. There's creative ways to make money and make impact. And I think that's our secret sauce at Capway.
I mean, it's an interesting point, that, isn't it? And actually, that sort of David and Goliath metaphor, as in, like, the agility of a startup, the slowness of Goliath and the big corporate in that way. But I get to your point. I mean, how much of that then? I sometimes think the passion from a founder and the founder's story and being the community around the business feeling represented by the founder and the narrative around the founder is actually a critical part of, the first 5 years of any business in that way. And to be honest with you, actually, if you go back to, I feel like this is something that all the big banks kind of forget, is that there was probably a few people who got together with a good idea to solve a community problem, and then 300 years later or whatever, they just got carried away, So it's like the origin of most organizations is similar to that. But the first X many thousand customers, that's what gets you that structure, isn't it? So, but do you think, I guess, to play the flip of that, and you say, look, you can do things that Chase can't do. Actually, do you think then the future of financial services is much more bespoke suits than it is, things off the rack? Because, actually, when you look at across any country, the US, specifically because we're talking about it here, but actually the ability to serve specific communities, to really understand the pain points and the problems, and to really be for certain types of people, that almost exclusive, as you say, like, you just want green people, and it's like, great, we're going to serve green people, and it's like, okay, well, that deep, and actually we've seen things like Daylight for LGBTQ would be really successful because of really understanding particular problems and actually how to solve them. Is that the future, do you think, of financial services?
Yeah, I think yes and no. I think yes, because Daylight, if you're talking LGBTQIA, if you're talking Kinley, which is their Black banking for Black owned, which I know is also part of the Visa family. There's definitely groups that are saying, hey, our bank is for this group of people. And to say that will not work, I think we've seen success from Daylight. So we know that it works. I think it's no different from, I think 10 years ago, if you compared that as an analogy to the entertainment world or the streaming world, if you say one day we're not going to use cable and instead you have to subscribe to every single different thing that you want. I have to only subscribe to Disney. I only subscribe to ESPN. Because only fans of sports is going to go to ESPN. I no longer have to do all of cable. I think it works. I think on the flip side of that, though, you have people who want to feel inclusive in all of it. And I want to feel like I got all of it. I don't want to feel like it's just for this group. I want to feel like I'm getting a little bit of all of it in one place. And so you're never going to satisfy everybody. Somebody's going to be okay with only banking with daylight because they only want to bank with people who they feel understand them and are like them. And then you're going to find somebody else who's also of that community but says, I want to bank with the bank that I get to be in the midst of everybody. I don't want to feel like I'm just with my group. I want to be in the middle of everybody. So yes and no, it's going to come down to the person. But I do think that those banks or financial services that are specific to a group will also be able to find ways to thrive because there are people who want just that.
Yeah, I mean, I couldn't agree more. I think there's room and a growth path for both types of entities. I think you'll continue to see fintechs that are innovating to solve very specific problems for very specific communities. And then those individuals who might get their needs met with their fintech may not get everything they need. And then, or maybe they have a problem that gets solved. Maybe they start to build credit in an environment where they otherwise wouldn't have been able to. And that fintech enabled them to build credit. And now they're graduating to a more mainstream credit-oriented product served to them by a traditional bank. So, I mean, I think it's greenfield. The runway is long, and there's lots of room for many players and lots of problems to solve. One of the things that, on our inclusive client partnership team that we observe and we think we understand a little bit when we talk to fintech founders, and in particular, founders who are minorities, is the struggle for financing, for raising capital. So Sheena, I mean, I'd love to hear a little bit about your personal experience in raising funds to help build your business, and whether or not you sort of see you're experiencing struggles that might look a little different than a traditional fintech.
Yeah. Well, it's been different in different rounds because our very first round, which was our pre-seed round, was all about unbanked and underbanked, which is, of course, now we've made a shift to be more of a wide net ecosystem. But when we were raising for unbanked to underbanked, it started out extremely hard. I'll be 100% honest. And I kind of spoke to it earlier where a lot of our investors were saying, oh, that market's not big enough. There's no money in that market. This is something you should be looking at from an international perspective, not necessarily domestic perspective. And then there's also the point of, I think no matter what I am pitching with Capway, I'm a numbers person. Data doesn't lie. Black women in the US, well, internationally, it doesn't matter the world, we receive less than 1% of VC dollars. And that number has not changed. We have yet to get over 1%, even in 2021, when I feel like the investors was literally like just throwing money at anything that walked by. We still yet came in under less than 1%, which says a lot. And so it has been hard. There's also not a lot of women in fintech in general, and there's definitely not a lot of Black women in fintech. And so every time I walk into that room, my back is against the wall. There's one thing to be a unicorn and say, oh, this is different. I want to take a glance. But there's another thing to actually bet, $10 million, $20 million, because it just doesn't happen. We did Y Combinator, which is the number one accelerator in the world. And I looked to my left and my right of people who started fintech companies pre-product and was walking away with $10 and $20 million. And I was struggling for two. Like even fundraising now we just signed one of the biggest partnerships that I would argue against a lot of people that have signed this year or the last probably since 2022. It's a struggle. And yet we still struggle to raise money. And that's just my reality. I tell my team that.
It is shocking. It is shocking to me.
No, I mean, it's unfortunate, but when I hire people at Capway, I'm very transparent as a founder. And I say, listen, there's probably gonna be times that I don't know if we're gonna make payroll. I mean, I'm very frugal, so we will, but I'm gonna struggle and I'm gonna have to step away more often as a founder to be in fundraising mode than if you were to probably go to a fintech that was founded by a white male from Stanford. Because I'm probably more gonna be in these first 4 or 5 years, it's gonna be in constant fundraising mode because that's the reality. And so if you're willing to be with us, I want you. But if not, I understand.
I've seen, thank you for being so open about that. I think I've started to see an emergence of more funds that are either minority-led or specifically focusing on trying to find investments for minority-led companies and fintechs in particular. Are you seeing enough of those companies, or are they maybe not as effective? They're not investing in your type of business. Like, I guess I'm trying to understand, like, there seems to be some money out there, but like, where's it going?
So there's a lot of, maybe a lot, it's not the right word, but there are numerous funds that are coming up that are saying we're investing only in minorities or only in women. The problem is, and the reality of that problem is, and I use Backstage Capital as an example because I love Arlen. Arlen is on our cap table. But even when Arlen made all that noise and she got her fund, she raised I can't remember how much her fund was. I think it was like a $5 million fund. So she's trying to stretch out $25,000 checks to like 1,000 Black founders that are coming to her. So her fund was around Black and brown founders and LGBTQIA. And so you got to imagine how many founders who fit that couldn't find money anywhere else that are like just scratching. And she's only has $5 million. So it's really hard to get that money out. Most funds that I've seen,
they don't have enough money.
Exactly. The funds exist, but they're like $2 million funds, $5 million funds. And in the world of fintech, for those who are even interested in the world of fintech, it costs a lot of money to run a fintech because you either have processing fees, you got your sponsor bank, you have all these minimums, you have to be able to have compliance, there's so many things that even to run a fintech that it takes so much money that it's literally, regulatory says you have to have a compliance officer. You have to have XYZ. You're spending $1 million almost just to literally run the regulated portion of what it takes. So if I'm raising $2 million, I'm right back in fundraising mode because $1 million just went out to the back end. That's not even including acquisition. So that's the problem.
Yeah. I think that sort of goes back to the point I was sort of trying to make earlier on. Is like, actually, it needs to be going beyond marketing. Like, actually, if there's 100 million that people are putting into something and they take 5 million of it and isolate it for, for various different causes in various different, whether it's Black or whether it's female or whatever it feels like marketing. It doesn't feel like I feel like it's almost solving the wrong problem. Actually, the whole fund should be inclusive, and therefore we should be looking for an element of equality across all of those things rather than a dispensation on the side of it to get to it. But I mean, it adds a level of pressure, as you say, Sheena, in terms of it's pretty hard to run a startup anyway. Having to spend 50% of your life trying to find funding for it, it doesn't make it any easier to make it successful. But I think going back to your point that you made earlier on as well, like, look, this is a numbers game. Like, actually, this business case well and truly stacks up when you start looking at the numbers behind it, and beyond that, the good that you can do for so many communities by doing good in that sense. So it feels like actually people might have a certain amount of prejudice in terms of actually where they spend their money, but capitalists at some point should figure out that they can make quite a lot of money by serving everybody in that way. But I'm afraid we are timing out, so we are going to have to wrap up this week's edition though of Fintech Insider Focus in association with Visa. Thank you so much to the panel for joining me. Where can people learn a little bit more about you and your companies? Starting with you, Erin.
Yeah, and I would just say, just on the topic of inclusion, I'd encourage folks to go to visa.com along with the search word inclusion.
Very, very good. And if you're looking for your company, Sheena, or to invest potentially in your company, there's a lot of people, a lot of investors that listen to this as well. Like that's not a bad shout. Like get it all out there. Where can people learn more about your company?
Go to capway.com. That's CAPWAY.com.
Very, very cool. Thank you so much for listening. If you love what you've heard, then subscribe to this podcast and don't forget to leave us a review. It really helps us make it better and helps other people find the show as well. For more on this discussion, look out for the next episode of Fintech Insider Focus in 2 weeks' time. Thank you very much, everybody. Goodbye.